The reality is, buying a home is becoming increasingly challenging. Home prices have climbed 40% since 2020, and interest rates are higher than they've ever been in over a decade, and lenders are stricter than ever. Let's say you find a $250,000 home. Sounds reasonable, right? Well, how much do you actually need to earn to afford it? The answer depends on a few key factors. First, your down payment. Next, your mortgage interest rate. Then your monthly income, and finally your debt to income ratio. Many first-time buyers struggle because they don't understand how lenders calculate affordability. If you don't know your numbers, you might find yourself house hunting for homes that you actually can't afford, or worse, getting into a mortgage that is way too much for your budget. But don't worry, I'm going to show you exactly how to calculate your target income step by step. Two of the most common rules to determine how much house you can afford are, number one, the 25% rule. This suggests that your monthly mortgage, including taxes, insurance, and HOA fees, should be no more than 25% of your take-home pay. Next is the 30% rule. Now this one's a little bit more flexible, as it allows you to spend up to 30% of your income on housing cost. So let's break it down with a real example. Imagine you're buying a $250,000 home with a 3% FHA minimum down payment of $8,750. You've got a 7% interest rate, and you're going to do a 30-year loan. Your estimated mortgage payment, including taxes, insurance, FHA mortgage insurance, would be around $1,900 a month. The 25% rule says you'd need to take home at least $7,600 per month or $91,000 a year. The 30% rule says that you'll need to have an income around $76,000 per year. See how these different numbers are? This is why understanding your personal finances is crucial. Now let's apply these rules to different home prices across the country. In Oklahoma City, where I am, the median home price is around $254,000. The 25% rule says you need to take home $7,600 per month or $91,000 a year. The 30% rule says you need an income of around $76,000 per year. Now let's move out west to Sacramento. Median home prices are around $417,000. The 25% rule says you need to take home $12,400 per month or $48,000 a year. The 30% rule, you need an income of around $124,000 per year. Now let's go all the way back east to Valdosta, Georgia. The median home price there is $191,000. The 25% rule says you need to take home around $5,800 per month or around $70,000 a year. The 30% rule says you need an income of about $58,000 per year. As you can see, where you buy makes a massive difference. If you're a first-time home buyer, it's critical to know your budget before you start looking so you don't fall in love with a house that's outside of your price range. So how much do you really need to make to buy a home? The answer depends on your budget and which rule that you're willing to follow. The 25% rule keeps you financially conservative, which I like, while the 30% rule gives you a little bit more flexibility. So what's the key takeaway? Knowing your numbers before you go house hunting. Now, I want to hear from you. Are you planning to buy a home this year? What home prices are you seeing in your area? Drop a comment below and let's talk about it. And if you want more home buying tips, check out my next video on mistakes that first-time home buyers make and how to avoid them. Don't forget to like, subscribe, and hit the notification bell so you don't miss out on future videos. We'll see you next time.